Hey guys, this is Rudy for Investor Investor, Mr. Oxy by now. What I thought we could do today is just take a quick look at the balance sheet as a first general topic, and then secondly, using the balance sheet as one of the fundamentals to try and figure out what my Occidental shareholding should be worth, or what the value is, the par value per share. So first things first, though, a balance sheet you need to understand is just the assets need to equal the liabilities plus the shareholder value or owner's equity. So I'm just going to write on here, owner's equity. If you can't read my handwriting, focus, like pay attention, pretend you're back at school, right? The assets have to equal the liabilities plus the shareholder value. So let's think of it like this. You're a student, you have $100 in the bank. You don't have any debt. So in other words, you're not a student in North America, which means that your net asset value or your shareholder value or owner's equity today is $100. So I have $100 in the bank. I don't have any liabilities. Therefore, my owner's equity or shareholder value is 100. Balance sheet has to balance. So let's take a look at Oxy. Oxy has assets of about 85 billion. It has liabilities of approximately 65 billion, and that has to equal the shareholder or owner's equity, which is about 20 billion. All right, so 85 equals 65 plus 20. I hope you can read my handwriting. Maybe my B's look like 8s, and then the value seems higher than what it is. 85 equals 65 plus 20. So let's just break this down just a little bit. Firstly, the balance sheet balances, right? 85 equals 85. This is a 20 for the people who are struggling to read my very school teacher-like handwriting, right? 85 equals 65 plus 20. So my balance sheet balances. The assets are sort of mainly two parts. I have approximately $10 billion in current assets, which means I have approximately $75 billion in other assets. The other assets could be a whole variety of different things, including assets like property that I own and all kinds of other things. And that has to equal the liabilities plus the shareholder value. The liabilities also consist of current liabilities, which is approximately 10 billion, once again, plus other liabilities, and then we know there's 20 there, so if we take the 10 and the 20 together, that's 30, and knock it off this, that means I have total other liabilities of approximately $55 billion, right? So far, so good. These things have to balance. So here I have a breakdown of current assets and current liabilities. Current liabilities typically means that these are liabilities that are due, within the next 12 months. So here I have a wash. My current assets is almost equal to my current liabilities, $10 billion each. It's actually about $10.5 billion for Oxy in the last quarter, but I'm just rounding, right? The other assets are 75, and the balance here is 55 in other liabilities or long-term debt, plus $20 billion in shareholder value. All right, so far so good? I hope so. Otherwise I'm failing miserably here in my attempt to be a teacher. So what we're going to do is we're going to say, how many shares are outstanding? So let me just take this away quickly because I don't need it anymore. We say, of this $20 billion in shareholder value, how many shares are outstanding in the marketplace today? The answer to that, which you can look up in your brokerage account, is about 940 million or so shares are outstanding. So let's make it easy and say it's about 1 billion shares that are outstanding at $20 billion par value per share, because remember, this is my shareholder value or my owner's equity. So if I have approximately 1 billion shares that are equal to approximately $20 billion, then each share at par value is worth about 20 bucks. Did I just say that out loud? Because I can say it again. If you own one share of Occidental based on its fundamentals, which is its balance sheet, one share is equal to approximately $20. then you can say, wait a minute, Mr. Oxy, not so fast. Because of the $10 billion in shareholder value or equity, in other words, owed to shareholders, Warren Buffett or Berkshire Hathaway owns about half of that because he has $10 billion in preferred shares. And it's like, okay, I'll grant you that because you would be correct. So what I'm going to do is I'm going to take that away. And I'm going to say, wait a minute, half of the shareholder value, $20 billion as of today, because Occidental issued Warren Buffett or Berkshire Hathaway preferred shares valued at approximately $10 billion, Berkshire Hathaway effectively owns half the shares at par value. So I'll remove that. And then we say, okay, then I'm left with $10 billion in shareholder value, which means the minimum value of an Occidental share based on the fundamentals at par value, which is kind of like the issue price, is $10 per share. Why? I have almost 1 billion shares outstanding in the marketplace, and they have a value of about $10 billion. $10 billion divided by 1 billion shares is approximately $10 per share. Now you know, based on the fundamentals, if Oxy is trading below $10 a share, based on its fundamentals, it is ridiculously cheap considering the par value of the shares. If it trades above that, that does not mean it's expensive because Occidental is a going concern. It is not a block of gold or some other kind of asset like a fancy diamond or something that you purchased for $10, which might be worth $10 in 50 years from now, or it could be worth $1 in 50 years from now. We don't know. But Occidental is an operational business. So the best way to look at the $10 per share at par value is to say that based on Occidental's fundamentals, is the minimum value that Occidental shares should be worth. Then you can say, well, how much should I pay for it? Well, if you can get it for less than $10, it's obviously quite a good deal because it generates free cash flow. And even though it's running currently at a quarterly loss, very, very soon it might actually turn into a quarterly profit and then an annual profit, especially as the price, for instance, of WTI and Brent might increase. So what I'm illustrating to you is that based on Occidental's fundamentals, the share value, a common share, one stock of Occidental should be worth at least $10 based on fundamentals, right? So then you can say, how much is it worth? And what I explained is that Occidental is an operational business. It is not a bar of gold. So think of it like this. If you had invested using the same balance sheet analysis in terms of fundamentals, if you said, I invested $1 million to open a McDonald's store, and because I had $1 million in the bank, I have no debt, then my shareholder value is $1 million, right? I mean, that's fair, right? It's very easy. I put $1 million into McDonald's. I purchased or leased a building. I did all the shop fitting and everything like that. It's a going concern. My asset value is 1 million. That's what I put in. I don't owe anybody any money. Therefore, my shareholder value is $1 million. Fair? That's at par value. What's it actually worth? Well, if I wanted to sell it, I could sell my McDonald's as a turnkey operation to another investor or someone who's actually interested in just expanding their franchise of McDonald's. Maybe they already own 2 or 3 stores and they want to add another one. How much is it? The actual price of the business would be based on a multiple of its revenue, net earnings. Say its annual revenue might be, let's say we're doing $100,000 per month on my $1 million business. My McDonald's is generating $1 million a month. If I sold it at 1 times revenue, that would be $1.2 million. Fair? $100,000 times 12 months, $1.2 million, that's my price. My asking price is equal to 1 year's revenue. Otherwise, I could say on this $1.2 million, I'm actually generating a profit of, let's say, $50,000 per month. That'd be 12 months, right? And I'm going to sell it at a 10 times, 20 times, whatever multiple based on my actual net operating income or net profit or whatever. In other words, that's a different discussion. We're no longer talking about par value. So what I'm illustrating to you today is that Occidental, based on par value, is worth at least $10 a share. So if you were fortunate enough to buy Occidental for less than $10, you probably got yourself a very, very good deal. And if you pay just over $10, you're still probably there or thereabouts in terms of being in the money on an undervalued stock. I hope that makes sense. I mean, it's a simple example, and not everything I said is absolutely correct because I'm rounding and I'm just using the balance sheet in this particular instance for illustrative purposes. But I hope it helps you in terms of thinking of what your Occidental shareholding might be worth and what you perhaps should be paying for shares of Occidental and potentially where it could go in the future. So on that happy note, this is Rudy for Bester Investor signing off. If you like my videos, please subscribe, and I'll see you guys again soon with more. The information, by the way, that I just shared with you in terms of Occidental came off the Q10 filing for the quarter, which is the actual filing that tells you exactly what Occidental reported to the Securities and Exchange Commission for the last quarter. So on that note, I'll see you soon. Take care. Stay safe. Bye-bye.